Hey guys, so today I want to talk about DocuSign stock, and this stock kind of goes hand in hand with other biotech stocks that we've seen rocketing up in price over the last few weeks. Now, one of the main stocks that actually moved today was Myrna as a result of the fact that they came out with a very strong antibody test for their new vaccine, and it looks like we're getting close here to finding an actual cure or a vaccine for COVID-19. And as a result, the S&P has been very green over the last few days. Now, a lot of people like to play those biotechs and kind of take that risk on their own shoulders, but I think that it's sometimes safer to play a lot of the other stocks that are going to benefit as a result of what we've seen happening in the last few weeks, 2 months time here, and ever since we had the economic downturn around 3 months ago. So one of the stocks that I've been really keeping an eye on here is DocuSign. And one of the main reasons why I like DocuSign is because of the fact that they have been able to benefit a lot from people being at home and away from in-person doctor's visits. Now, the company focuses on cloud-based electronic signatures, and what it kind of does is help individuals and companies collect information and kind of automate the stuff they do and potentially sign any type of patient doctor thing that needs to be signed while people are at home and while people want to do this stuff electronically over the internet. Now, we've seen a large increase in the number of online visits and online doctor apps and other type of services that have been offered on the market here within the last few months, and that's largely as a result of a lot of people staying at home and a lot of people having no choice but to get their usual in-person visits online or through an online mode. And one of the stocks that has largely benefited, like I said, is DocuSign here. And they've had week over week over week of growth for around the last 3 months, or literally ever since March when the economic downturn happened. Now, you can see that they're around a 190 price range, and a lot of people were kind of asking me whether or not this is a good price and whether or not we could potentially swing trade this stock now that it's coming off of its highs of around 215. Now, one of the main things that I do like to look at is where analysts kind of price this stock. Now, this is a stock that isn't going to have a whole ton of news moving its price, and they're not really going to be doing anything insane like Myrna, where they're releasing a vaccine, or like other companies like Vaxart, where they're in trials, etc. They're not going to have that type of move, and they're not going to be moving based on some kind of insane first minute news that you have to basically hear before everybody else to kind of get in on the play. They're going to be moving as a result of the larger market as a whole and of these type of analyst ratings. Now you can see that DocuSign is performing better than anyone expected, and this investment firm Wedbush is lifting their price target to around 240. Now, this isn't exactly a foolproof strategy of just listening to what an analyst has to say, but it does kind of give you an indication on whether or not it's a good time to buy, or you should wait to kind of see a pullback or kind of see whether or not it hits that level. Now, one of the main things I like to do is go to the technical analysis side of things and kind of look at whether or not a stock is worth buying at the time or if we should wait. And especially with swing trading, I like to look at the day chart. Now, this is tradingview.com, and one of the main things that I like about tradingview.com is how clean the chart is and how easy it is to kind of set up these price resistance and support levels in order to swing trade on a daily basis. Now, DocuSign here, you can see that their daily chart, it has a lot of growth, but it kind of doesn't really show us a good picture of what's happening. But on the weekly chart, we can see an extremely clear picture of what's happening. Now, a lot of people like to say that when there's growth, when there's momentum, what you're kind of going to be seeing on the week chart is that the last candle is below the next candle. So if there's two greens in a row, this last candle has to be below the next one. Now, obviously, if it's something like this, where they're very close, or maybe they encroach a little on each other, like this one and this one and this one, it doesn't really necessarily mean that the trend is broken. It just means that you have to consider whether or not you kind of see that positive momentum continuing, or whether or not you're kind of wanting to see a pullback with the stock here. Now, everybody knows that stocks can't run infinitely. And every few weeks here, you can see that they've had one week where I essentially call this a period of consolidation. And what this means is that the stock basically traded flat for that week. You can see that they opened up around 104.05, and then traded, and the next week after that or 2 weeks after that they opened at around 104.05 again, and that's when their move continued. And then again here at the 138 mark they traded very flat, and then 2 weeks after they came up all the way to the 150, 170, all the way to the 215 that we saw on Robinhood there. So yeah, now they're having a period where the last week has not been like these other weeks. Now, if they were simply trading flat like this, I probably wouldn't be making this video. And instead, I would be kind of saying, okay, watch for another green week here on DocuSign and watch for them to continue increasing for another couple weeks, as we've seen every time there's a consolidation period. However, this red candle is substantial enough to the point where they are having a more than just consolidation. They are kind of establishing a channel here and kind of establishing what they're going to be doing within the next few weeks. Now, you can see that their highs were around 215, like I said, and then immediately they came back down. But how can we kind of identify where they're going to be coming back down to and where we should kind of set our buy or sell targets for? So what I like to look for is where the last time that they had a price reversal and where they have a lot of candles grouped up as a strong indication of where the support and resistance levels are. Now you can see that when they did stop a reversal, they had it around the 198 one time, came back up to 198, immediately pulled back, and then a third time came up to 198, and there was a lot of consolidation at this price as traders kind of decided whether or not they were going to be able to break or maybe come back down to this 187, where we did see them test maybe once, twice almost, and then again over here 3, 4, and 5 times even now. So we're kind of seeing a similar thing over here in these last 3 days as we're seeing over here when the trend first started, where they had a breakout, and then a solid period of consolidation. And here we're seeing a breakout, and then another period of consolidation. However, over here, there's no pattern really identifiable. However, in this one over here, you can see that they're kind of coming into a wedge pattern, and they're kind of trying to break it here on the 1 hour chart. However, if we come to the bigger charts, then you will be able to see that they haven't broken this wedge yet, and instead are kind of establishing where the wedge is exactly. Like if I move that line just a little bit, obviously these levels aren't set in stone, so you can kind of shift around your wedge and still be expecting another bounce, probably from the 190 to the 188 if I was a betting man. And then I'd say that they're going to have a huge move either in the upwards direction or the downwards direction. Now, I do think they have a lot more downwards direction coming than upwards because of the fact that they've been running up so strongly for so many weeks. Now, I see a very, very high resistance level here around the 178 where they try to reach down a couple days ago here on the last hour chart. However, I don't think that they could break down below that as a result of the fact that this is already another channel here. So if they were to come down all the way to right here, then I would say watch for this to be a new channel and them to be trading between this range. However, I really don't think they're going to be able to pull back that much, as this has been one of the most hyped stocks on the stock market within the last few weeks here. Now, one of the things that I do want to point out is that this company is subscription based. So a lot of people are kind of wondering whether or not when this company or when the market recovers, when people go back outside and when they're able to have their in-person visits, whether or not this company will simply pull back to around the $100 range, to the 90, 60, even before what it was worth before the economic downturn. And to those people, I'd say most definitely not. Now, this company has acquired hundreds of new customers in the industry and are making almost 4 times the revenue that they were making in 2016. And as a result, that's why they've been able to increase. Now, you may know that in 2016, there was no COVID-19, there was no economic downturn. So the fact that they were able to keep increasing over these quarters shows that they have a strong growth even throughout the times when there's no need for their company to potentially be in the limelight like there is now when people are taking at-home doctor's visits and other type of crucial things that could affect their stock. So essentially what I would say for DocuSign is that they are a long-term grower here. Now, I would expect a pullback, a very, very strong pullback whenever the market does reopen and whenever the full 50 United States of the US do reopen. I do feel that DocuSign will have a pullback as a result of the fact that a lot of traders are irrational. They don't understand that this stock is basically undervalued at the time, and even undervalued at the time, but at the same time, they are a stock that is going to be increasing into the future as more and more people do online doctor's visits and more apps and services come out that allow people to see their doctor at home instead of having to go to the office and in person. Now, this is very crucial for people who may have a autoimmune disorder or who may have difficulty getting to the hospital or to the emergency room or maybe even to the doctor's office. So this company has a lot of room to grow into the future, and a lot of people are going to need to use them. So that's why I think they're going to be having a lot of long-term growth potential. However, in the short run, as swing traders, we kind of want to watch for these patterns and know what the other people in the market are thinking. Now, obviously, I think this is going to be a very strong play coming into the future here for the next year or two. But a lot of people are probably watching and waiting for the exact moment that the markets decide to reopen and are going to be playing that time very strongly here in order to potentially profit off a move to the downwards direction here on DocuSign. So yeah, guys, just keep a close eye out. Like I said, these are the ranges that I've identified. The 178 range is probably going to be a very strong resistance point where they won't break below. However, I do see them holding as well at this 186 as they've tested it already 3 times and nothing. However, wait for the end of this wedge pattern to form around probably like in a day or maybe even 2 days from now. When they do hit this 188 level again, watch in case they do have a large breakout to the downside. And even if they do break out $2 or $3, just know that this stock can break down all the way to around the 178. So don't think you're out of a play just because the stock already showed its cards and its true colors. You still have a lot of chance to profit. Now you can see that they are wanting to break this wedge to the upside. So if they do come up to around the 193 level, I'll be looking for a trade to hold maybe 1 or 2 days until they, or sorry, around 4 days probably, I would assume, until they hit the 198 level again and potentially start trading back downwards. However, they could become another period of momentum, and maybe looking at the 1 week chart, they could potentially reverse and have another week where this whole candle gets erased and they come back up to the 210 range or the 220 range where they were trading at before. So yeah, guys, just keep a close eye on this stock. This is a very long-term growth stock. You can see that the RSI is extremely sold off right now, overbought. So that's why they are having a pullback here. But the MACD is still showing a very strong upwards direction. So that's why I kind of would say be wary of the bears. There's always going to be bears and people telling you that something is overvalued. However, I don't really consider DocuSign as being overvalued. And I think that they have a very good chance of running up until their earnings that are coming on September 3rd, where they will probably be higher than what their expected revenue is. You can see that for the last 5 or 6 quarters, except for Q2 of 2020, they've been able to hit substantially above their earnings estimate. And that's kind of why they're also running, because of the fact that they're in an industry that is expanding very strongly, very quickly, and are very poised to be one of the main gainers because of this growth in their industry and as a whole overall in the online teledoctor kind of industry and kind of sector. So yeah, guys, just keep a close eye out on this stock, and as always, don't forget to like and subscribe the video and watch out for the plays.